So using data and continuous monitoring, I've seen a few questions on continuous monitoring actually in the question list. Both are really critical enablers of effective dynamic audit planning, but only when they're grounded in how the business operates. So many audit functions have access to large volumes of data, yet much of it is static, it's backward looking, or it's disconnected from day-to-day activity. The real value comes from using operational and risk data that reflects how risks are changing in real time. Now, examples of useful data include perhaps transactional volume data, exceptions rates or errors in key processes, system access changes, privileged user activity changes, overdue reconciliations, manual journal entry trends, third-party performance and concentration metrics. Customer complaints data is really helpful. Incidents, I've talked about incidents and loss data. IT data such as patching delays or system downtime. Now, nearly all organizations, regardless of size, now have some form of data warehouse, and data is improving its quality and relevance so it can be leveraged. Now, I know you'll all be in different places on this, but start small and build. Of course, you need to also be plugging into external data, such as regulatory developments, market volatility, supply chain distributions. Do you know the key supply chains for your business? And can you get regular information and data on how they're operating? Now, continually monitoring data of this kind allows us in internal audit to be close to the business rather than solely relying on these formal periodic risk assessments or the annual planning cycles. And regular engagement with process owners combined with near real-time data, especially if they've got it, get access, helps distinguish between temporary fluctuations, which are going to occur, and meaningful shifts in risk exposure. Now, importantly, these insights should feed directly into your audit universe. As risk indicators move, for example, sustained increases in control exceptions, perhaps there are rising operational losses and write-offs, or perhaps there's deteriorating third-party performance. The inherent and residual risk ratings of relevant audit entities should be updated proportionately. And that ensures the risk assessment underpinning the plan is now and not last year's view. Now, data doesn't dictate our decisions, it informs them, but it gives us some discipline around it. If you can get data analytics working that highlight where risk is increasing, stabilizing, or declining, built more dynamically, then that's great too. But I accept a pragmatic approach is essential. You can't monitor every risk continually, so that's not your job. Not every data point is going to be valuable or accessible. So leading practices highlight high-risk areas, processes with reliable data, and indicators that are linked to your planning objectives. So start small with a focused set of metrics, build that confidence, and avoid unnecessary complexity. Ultimately, continuous monitoring strengthens our role in internal audit as a forward-looking, business-aligned function. We staying close to the business and dynamically updating our risk assessment based on all this data and intelligence we're gathering improves our strategic kind of contribution.